Well, it's finally happened. The US tech market has just made a new all-time high, and as trends go parabolic, we need to discuss what happens next. According to some investors, it's going to get even better. The Mag 7 may continue to lead in 2024, according to Morgan Stanley. But is there something a little bit more sinister under the wraps for 2024? Today we talk about January and February implied volatility, because guess what? It looks like things are about to spike up. And what is going on with this week hitting its options levels straight away? Will we see a little bit of a slowdown at near all-time highs for the biggest stock market in the world, the S&P? More importantly, where are the next opportunities? As we always talk about in this channel, it's all about abundance. Will one of the biggest laggards, being Tesla, finally break out to the upside? Join us as we discuss stocks, commodities, and cryptos together. Well, welcome back everyone to The Daily Show. My name's Tom. We've been running this show together for over 3+ years. And if you like anything to do with markets, please remember to subscribe and smash that like button. Let's talk about breadth, because it was a pretty good session across the board. And we basically saw everything firing except for tech and semis. They had a good day on Monday. Look at the leaders here: solar, metals, clean energy, biotech, and also we had a nice little uptick in energy stocks, which we've been discussing in recent days. And this brings us to a 5-day movement of some incredible returns. And I think this just brings me back to that idea of abundance mindset. Remember, there are always different opportunities in the markets, and you shouldn't really be focused necessarily on the ones you've missed, but instead the ones that could be arriving in the future. And I think the last 2 months should show you that. A lot of rotation and a lot of opportunity. Speaking of opportunity, if you're interested, check out our free VIP weekly newsletter. Links in the description down below if you're interested in signing up. So let's get into the macro now. And I just wanted to bring up some interesting stats before we get into the volatility maybe moving forward, and also what the options have in store for us as well in the markets, along with some dark pool activity that's going on at this stage in some of the biggest stocks. So first up, look at this, the Mag 7 compared to entire countries' stock markets. If you took the UK, China, France, and Japan, it still wouldn't make up as big a stock market as the entirety of the Mag 7. It just shows you how top heavy these markets are and how big those companies really are. If they start to fall, everything comes with them, basically. When we talk about most shorted companies in 2023, you can see really since the Fed meeting last week, or the Fed discussion, and of course the interest rate meeting decision, we ended up getting a huge short squeeze that's come through. Most shorted companies flew up, along with unprofitable tech companies really getting some big movements into it. And a lot of this is because, of course, what would you want to see if you're an unprofitable tech company? Cheaper rates, and that's what's been happening on the horizon. Here are some interesting stats. Now, this is from low to high in near record time, 33 trading days. The only other time we saw this was 1957 and 1982. And funnily enough, you might not like to hear this, but in both cases, the average stock went to gain 46% over the next year. Now, I'm not saying that's necessarily possible. It's such a limited amount of data stat, but wow, it shows you that when you have these incredible parabolic markets, remember they can go for a while. I always remember this saying, when people believe that a market is in a bubble, it's very unlikely to crash. It's when they stop talking about a bubble that you need to be very worried. Let's talk now about what retail traders like you and I are tending to do on the leverage side. So this is on the CFD side of markets. Well, as it turns out, a lot of people are still going short markets across the board. The S&P is 66% bearish. People on the FTSE, pretty mixed. Dow, 78% bearish. DAX, back up to 81% bearish. And then, of course, we have gold and oil. Noticeably, there's a big shift in oil, though. Oil has moved from being so bullish to a little bit more bearish, which allows it to possibly be forming a base at this stage. So guess what? It looks like at this stage, not enough retail traders have been wiped out to allow the markets to actually sell off yet. And it looks like they could continue to squeeze moving higher. That's only one part of the picture, but it certainly is occurring. In terms of what the Fed's been doing, there's no doubt that the Fed has been supportive of this market move. Excess liquidity continues to rise as the market basically moves towards less and less and less reliance on, let's say, a tightening structure, such as the Fed would make you believe. It's not really been occurring. So let's talk CTAs. As we know, CTAs have been increasing their position over the last week after dropping down through this build. And I think a lot of that was made off the decision of the Fed. Basically, when we saw interest rates drop off, everybody started to come on. They didn't want to miss out on what is currently a parabolic run. Speaking of parabolic runs, is it cheap to basically buy some kind of protection? The answer is quite simply yes. We're seeing the PCE here going down to new lows over the last couple of years. More importantly, we've also seen a huge movement of the market at the same time. Now, this doesn't necessarily mean that it's a great time to go out and buy protection because, of course, we have no signal yet. Remember, for a long time, PCE started to be low while markets drove higher. Let's now talk about implied volatility or vol moving forward, because this is where things get interesting. According to Bloomberg, we are looking at the front 2024 VIX contracts, and you can see that by mid-2024, there seems to be some kind of implied vol. Over the last 2 days, we've seen an increase in print over this, and it's signaling that some hedging interest is starting to come in, but it's not right now, it's into the future. Now, I've read some of your comments, and a lot of consensus seems to be that we should fall in March of 2024. At least that's what a lot of people think. Now, traditionally, if we all think something, usually it happens either earlier or a little bit later. And you might be surprised to know that often February does bring some negative markets. So it's going to be an interesting point. I think that the more we go higher and higher and higher, and the more parabolic we go, the worse the ending's going to be. Remember, the quote is that if we go up into a parabolic market, we don't tend to correct by going sideways. We correct by having a pretty brutal sell-off and volatility spikes across the board. So are we on the horizon for that? Well, dumb money confidence would suggest it. However, there is a period of time when this didn't work over the last couple of reads, and that was 2020 to 2021. If the market chooses to go very, very aggressive, then of course we're probably going to move into some kind of hyperactive market. One of the great stories I always remember is that when markets are called a bubble, they're never going to crash. It's when people move past the bubble and start believing in unbelievable numbers that you need to start being very, very cautious. We're not really even at the point where I've heard too many people say bubble, but guess what? If it starts getting into the papers, there's probably still more to come. Let's discuss here in terms of the options, because of course our expectation was that we may stop at around 4,800 this week, according to some of the option walls. Now, this is a big level because we're very close to it, and we just hit around that almost 47.76 area that we've already been targeting. Here's another one suggesting that the options calls at 4,800 would be a great resting point by the end of the week session. We've also been talking a lot about oil. We know that CTAs have been incredibly restrictive on oil, pushing the price down. Since that point, though, we've seen some very nice price action structure, suggesting that we're putting a base in for oil for now, and I think that would be generally correct. We've already talked the stats on the channel in recent videos, but then we've also seen here post OPEC plus sell-offs may be overdone, and it looks like there's some inflows coming back in. In terms of all of your indicators, whether it be RSI, whether it be MACD, whether it be percentage of stocks above moving averages, it all will be overbought right now. The space at this market and how fast it's been going, most of these indicators will be giving you completely false signals. Remember, it is actually better to use percentage of stocks in particular to buy markets in fear than it is to necessarily sell them when they've gone toppy. And you can see here that we have reached points where traditionally we've seen turn prices. However, we haven't got any price action. And never lose sight of this. It's not going to be the narrative because, of course, this week we've got plenty of narratives about shipping and all sorts of things supposedly scaring the market. Now, that's not happening so far, is it? But it's going to be about the price action and the structure on the market. So follow along as we try to uncover that should it actually be occurring. In terms of what's going on for this week, we're going into, of course, the traditional Santa rally, and this has a 34 and 16 positive rating with it over the last 50 years. And traditionally, it's kind of these 5 days leading into Xmas. Some people have it after Xmas into, I think, the first 2 trading days of the new year. But either way, it's usually a positive seasonality effect. What we're looking for is a couple of things. First up, I want to talk about the 7-win streak. Now, of course, we made a big deal about this because it is pretty rare. I mean, you can see there's only been 21 other times where we've ever seen the weekly go up for 7 weeks straight. But what we do know is that usually the next 4 weeks have a pretty good track record, 16-4 in terms of positive market reactions. Now, that's interesting because, of course, we don't see a volatility spike until really February next year and March. So could that be the time when we start to get a little bit scary in the markets? And it's quite possible we run to that point because, of course, we also have rotation to compare with. And as we know, small cap versus large caps, we first brought this up in December 11th, and it's showing us that small caps continue to be usually the best rotation at this time of year. And here are the stats that kind of are suggesting that that may be true again. The Russell 2000, after 38% of the Russell 2000 stocks register a 63-day high, it has a pretty good stat coming along with it. Here's about the calls and, of course, the puts, and everyone was making a big deal about this, but as we saw, markets have driven higher since this reading and usually do. And actually, they could be in a breakout towards movement highs. Same thing is with the seasonals. I mean, we're seeing Russell 2000 seasonals also showing us a pretty strong time into the February kind of period. So again, it all kind of lines up together through the markets. So let's now talk dark pool activity. So there were a couple of big ones. Number one, we have here Nvidia getting a big trade as we are exiting potentially the chop. Now, could this be a trade for a breakout or is this a bit of a sell? I'd say it's probably some profit targeting into the end of the year, but yeah, time will tell on that one. The Russell 2000, a critical level. This really just demonstrates how many trades have gone through this high and why this has been the point where the Russell hasn't been able to break out. This is the first time, though, that I would say the Russell 2000 may be able to break out, and it looks kind of positive. Look for the weekly close in our weekend video to discuss that in more detail, because I think it may be the first time the Russell is going to break out through it. Now, what about ProShares short S&P? A fairly large trade coming in. Someone big has just had a go at the market at these all-time highs or near the all-time highs. No surprise that someone would do this, but yeah, someone is obviously trying to go short here, and usually they tend to be very, very quick trades, so we'll be looking for them to get out as well at some point soon. Maybe they're going to lose, who knows. And another large trade coming into a fund that is realistically mostly in big tech. So yeah, are they profit targeting? Probably seems likely. They most likely bought at these prices here, and they've exited here saying, you know what, that was pretty good, thank you very much. It doesn't mean that instantaneously the market's going to turn around. Remember, people have different trade systems to you, but there are some large trades coming through on these highs. Let's now discuss everything to do with options. And straight away, it was a pretty large options day, bigger than the average, 63% calls. One of the largest reads we've seen on calls in a very long time. That is a huge read here. And I think that we need to be paying attention to the fact that we have, a very significant number of calls that are now in the markets. And it's driving the market higher for now. But if things happen with price action, get ready for some volatility to occur. Retail traders made up 25%. And you can see here in terms of unusual trade activity, we continue to get some pretty big ones here for the Russell. Russell doing almost not 2-to-1, but certainly a much more substantial call rating here. And then we have some big reads through MSCI emerging markets, getting a lot of positions on that as well, as people probably look towards, maybe some other markets that could give them gains. Things like Brazil, you can see here's going through. We also have a decent amount of puts coming in on the Qs, suggesting that it's going to be very difficult for the Qs to short off, at least initially, because of course people are adding puts due to the all-time high. So no doubt we probably try to drive a little bit higher from that point. And there's plenty of other stocks there that you can see on the screen. But let's get into the charts. First up, let's go through some indicators. Number one, effective yield rate is really, really low. Number two, skew. Yeah, I'm bringing the skew back because it got crushed. It got crushed, guys. Look at this skew. Gets crushed back down. Now, traditionally, when the skew gets crushed like this from the rating, that has not necessarily been very good in the markets. And I'll show you what I mean. So if I put the S&P on this, and then we think about some of these crush points. Now, we got crushed here and we went a little bit higher, but then we pulled back. Now, over previous crushes, here's a crush that came through. Obviously, markets fell recently after that. We got crushed here, markets went down. We got crushed here, big crush, markets went down. So it's something to be considered. Markets went up a little bit and then had a pullback. It generally means there's some form of weird pullback coming fairly soon, and that's a big crush on the skew. So I'll have to see whether that sticks. But it is a fairly big read and something I thought I'd bring up. Bond indicator also dropping down 2 days in a row now that we've seen this drop off. So that's interesting, but still not really super concerning. We have no price action saying negative on the markets just yet. And the volatility of the VIX, so this is kind of the VVIX, has remained relatively stable through these lows in comparison to the VIX, which has been sitting very low here at 12.52. Remember, a low VIX doesn't mean that volatility has to come in, but we do know that there's hedging going on somewhere in the future. You know, people are starting to hedge those Febs, those Marches, and those Aprils of 2024. US 10 years still not maybe near its lows yet. We kind of speculate that this could go to 3.7 to 3.8 before finding a significant bounce. You can see here it's just consolidating over recent days, and that's led into treasuries consolidating at what we have seen has been very large selling. So someone has most likely sold at this point, taking some profit, and no wonder why. I mean, it's been an incredible return here on treasuries, and they're not usually a trade, but I can tell you what, that is one of the better returns I've seen on treasuries in such a quick time frame. What about the American consumer? Well, according to this, the consumer discretionary versus staples are doing pretty well, and the market has been moving higher. Again, it's a positive sign for markets at this stage. Also, home builders is doing okay. I mean, yeah, it's slowed down, but after its parabolic run, it's just going sideways. 2 days of weakness followed by a day of strength. Same with transportation average. They've been doing all right. Central bank liquidity pulling back a little bit on the repos here, and obviously there's many calculations into this, but you can see still quite supportive of the market coming up. What we're looking for here is really this to start tightening up a little bit for the market to actually say, okay, it's time for us to turn around. So again, still more reads in terms of positive for the market than negative at this stage at this present time. Copper, what's going on here? No breakout yet. Looking at a 3.93 for copper to break out and start to move higher. And it looks like it's pretty positive on the charts. The dollar index failed at the supply. So you can see here it was coiling and then it broke down. And it could suggest that maybe the dollar wants to move even lower. So yeah, watch that one, watch the space. Obviously, if yields go down, expect the dollar to come down as well. But yeah, US dollar, the short was when it broke through here to get into the short. And so far it'd be up a little bit. The reason, because it had coiled so much at the key zone. We spoke about that in our Market Masters Club subscription as well in terms of the open. And we were hoping actually would break to the upside because that would have given you some sweet trades on some of the other currencies. But sometimes you just got to wait. You know, you be patient. Patience, react, don't predict, because predictions not usually that great. Let's talk about gold. So gold had the most traded short zone or most traded zone here. It rejected, couldn't make a new low. Obviously, it's back up. Very questionable with gold. If you had to say, even though it had like a pretty good short here, in my opinion, if you're looking at the price right now, you'd say, well, there's a good chance it might go towards 2070. But as I've said before on this channel, I think gold's in a kind of holding period. Some people will say, well, look, Tom, it's an inverse head and shoulders, bro. This thing's going to the moon. I'm still positive on gold over the medium term. I just thought it might have a month slowdown due to, of course, all of those huge short squeeze sell-offs we saw only 2 weeks ago. US oil, on the other hand, fantastic. Very nice movement from oil. It got to our most traded first zone, then it broke through it, and it looks like it's going on its way towards 76-ish a barrel. So yeah, I'm pretty positive on oil from this point, at least on the short term. Let's talk about Tesla now. Now, Tesla's an interesting one because, of course, everybody's going to think this is a short because it's a shooting star. Now, I've got a little alert above it. If it does manage to get out past this level and not instantly reject, there's a good chance it will actually make its way towards 274. And if you overlaid this on the S&P, you would notice that Tesla has been a massive underperformer and the worst Mag 7 stock by far recently. So, you know, if retail traders are going to get involved in this, and remember, calls have been increasing recently pretty heavily here on this stock. If it breaks out, I could see a lot of flurry on Tesla into the end of the year. So a very interesting stock, very interesting chart to be watching. Energy stocks doing okay, obviously breaking up a little bit over the last 24 hours. We're looking for a breakout of 86 to really solidify that energy stocks want to come with the rally for a little bit here. They have been one of the worst sectors. So they've also got an island reversal. So it's been an okay section of the market. And you can see here that TAN made a new high. And what this is showing you is that maybe there's a little bit more to come with solar. It also broke out of its weekly 20, which basically sat right there. So that's a fairly big deal. Maybe there's more to come on these solar stocks, even though they've done so much already. German market had a little bit of a pickup after weakening off. It came down to not quite 16,600. I guess at this stage, I'm kind of thinking sideways for the German market. Maybe 16.5 is possible on the short end. This has been the weakest of the major indices after being pretty much the strongest, hitting 17K. It's in consolidation at this stage. Australian market now looks set to maybe break to a new all-time high. You can see here, this is a big level, 7,600. We're at 75.40. If markets around the world, including the S&P, end up going through to new highs, expect the Aussie market to possibly go towards that beautiful 7,800 level. And it's already completed first TP. That was a beautiful inverse head and shoulders. But yeah, usually when markets come up many times, I mean, we'd be talking about 1, 2, 3. This would be the fourth time testing this level. Then they do tend to like breaking at that period. Speaking of breakouts, the US 2K is fast approaching. Look at this. Look at that level. I'm just going to put a zone on it so you can see it. So this level here is a new high break if it does happen on the Russell. And if that occurs, plus we get a weekly close that's higher, it could mean a big deal for the Russell. And maybe we go even higher and we continue that rotation we've been speaking about for a little while. This is still a very large underperforming section of the market. From all-time highs, we are still down 18%. So it really shows you that, well, maybe it's still got some opportunity in it. NASDAQ, on the other hand, just keeps driving higher, a series of higher highs and higher lows. Take a look at these dailies since breakout. Never has it made a lower low. So it just keeps making higher high, higher low, higher high, higher low, higher high, higher low. Until that sequence breaks, nothing's going to stop it. That's just how it is. So we can't go against this market. It is not a good idea. If you are against it, you've got to be selecting the correct instrument. That's really key here. S&P 500 is kind of the same way. However, the S&P did hit, or it's almost hit into our top end range for the week. Remember, we kind of speculated 47.76 to 4,800 was where the market would like to sit by the end of the week. It's fast approaching those targets. So I think even in the futures market, it's starting to get very close to the 47.76 kind of zone. You can see here 47.73. So really what that's telling us is that the US market is poised to make a potentially new all-time high. At this stage, the only thing that can really stop it is some kind of bear stepping in around this area, and we have absolutely no price action to tell us that's there. We have every overbought signal you've ever seen, but overbought will not do it when you're parabolic. And we first reported, of course, on parabolic last week when we saw that Fed interest rate decision. That sent the market into what we call parabolic, which means that we're not going to go sideways in the end. We're going to get brutalized. But that's okay. We don't know when that's going to happen. We can't prep for it just yet because we have no price action to state it. So very good. If you've been long this week, congratulations to you. And of course, markets have been doing well. Now, Bitcoin's an interesting one. Very difficult read. Went on to 43.5, sold it again. Now, 43.5 is the sell level. We've talked about that over here. We talked about it. Obviously, it's possible here. It does look like Bitcoin kind of wants to get towards these highs. I would say some kind of speculation about Bitcoin ETF comes out, which is what seems to be happening at the moment. And then kind of it rallies, maybe it gets up, and then ideally it would pull back after that into the cycle next year, which we'll talk about in a subsequent video. Just a reminder, make sure to sign up for our free weekly VIP newsletter. And obviously, in terms of big news for the end of the week, we still have some news coming out. You can see it here. Core PCE price index, maybe Philly Fed manufacturing survey, GDP, whatever. We'll see what happens there. But really, not much of this news should move the markets heavily. It would just be an excuse. In general, what I'm looking for is price action. And of course, we'll be looking together on this channel for that over the subsequent months. The biggest interesting factor at the moment is, of course, the spike in vol expected early next year. Thank you so much for watching. We'll see you in the next one. Bye for now.